Have you ever wondered how to maximize your tax savings under the Income Tax Act of 1961? Well, you're in the right place. Today, we're going to talk about deduction under Section 80D. This is a provision under the Indian Income Tax Act that allows taxpayers to deduct premiums paid on health insurance policies, thereby reducing their taxable income. Why is this important, you ask? Well, it's a smart way to save money, and who doesn't love that? Also, it encourages us to invest in health insurance, promoting overall well-being. This video will first break down the basics of Section 80D, making it easy to understand. We'll then explore some real-life scenarios to demonstrate how it works in practice. Finally, we'll wrap up with key takeaways and a conclusion. Intrigued? Let's dive deeper into the world of tax deductions under Section 80D. So, what exactly does Section 80D of the Income Tax Act entail? Well, it's all about deductions you can claim on your income tax for certain types of health insurance premiums. Now, these aren't just any premiums, but specifically those that you've paid to insure yourself, your spouse, your kids, or your parents. Let's break it down a bit. Say you're a tax-paying individual, you can claim a deduction for the premium paid for your health insurance. And if you're a Hindu undivided family, you can do the same. But remember, you must have paid the premium yourself to claim the deduction. Now, what about the amount you can claim? For individuals below 60 years of age, the maximum deduction is 25,000 rupees. If you're above 60, that amount goes up to 50,000 rupees. And if you're paying the premium for your senior citizen parents, you can claim an additional 50,000 rupees, irrespective of whether you're below or above 60. But here's a common misconception. Many people think they can claim deductions on premiums paid for their siblings or in-laws. Unfortunately, that's not the case. The deductions under Section 80D are strictly for premiums paid for self, spouse, children, and parents. Another point to note is that preventive health checkups also qualify for deductions under this section. You can claim up to 5,000 rupees for these checkups within the overall limit. So, in a nutshell, Section 80D is a provision of the Income Tax Act that allows you to reduce your taxable income by claiming deductions for specific health insurance premiums and preventive health checkups. It's a great way to save some of your hard-earned money while also ensuring you and your family are protected health-wise. Now that we have a better understanding of Section 80D, let's delve into some specific examples. So how does Section 80D apply in real-life scenarios? Let's imagine a few situations to shed some light. Suppose there's a single individual, John, in his late 20s. He pays a premium of 10,000 rupees per annum for his health insurance. Under Section 80D, he can claim a deduction for the entire amount. Now consider a family. Let's say Michael, who's 55, has a health insurance premium of 20,000 rupees for himself and an additional 15,000 for his parents who are senior citizens. In this case, Michael can claim a deduction of up to 50,000 rupees. Then there's the case of Emily, a self-employed woman who pays a premium of 25,000 rupees for herself and her children. She too can claim a deduction for the whole amount. These examples illustrate that whether it's a young professional, a middle-aged parent, or a self-employed individual, they all stand to gain from the provisions of Section 80D. As we can see, Section 80D offers substantial tax benefits in a variety of situations. So, what are the key takeaways about Section 80D? Let's start by recapping that this provision of the Income Tax Act allows deductions on premiums paid for health insurance policies. It's an opportunity to reduce your tax liability, making it a key component of any savvy financial plan. The benefits aren't just for individuals either. Families can also make use of this provision, with increased deductions available for senior citizens. But it's important to note that not all health insurance policies qualify, so it's wise to consult with a tax professional to ensure you're making the most of your potential savings. This isn't just about saving money, though. It's about encouraging a proactive approach to health and wellness. After all, a healthy population is a productive one. Remember, understanding and effectively utilizing Section 80D can make a significant difference in your tax savings. So keep these points in mind when planning your taxes for the next financial year. Thank you for watching.